A very, very happy Golden Jubilee marriage anniversary to
Thank,
you, sir.
thank you very much. Thank you. Thanks a lot. Thanks a lot. अच्छा कितने गुड इवनिंग टू ऑल कौन कौन लोग
थोड़ा
हेलो
sir.
am I
Please, please.
audible
Yes,
am I
sir.
audible
Yes,
Oh,
yes
yeah,
yes.
sure,
today
sure.
to all
दिक्कत हो रही है.
today is the third meeting what we are having of the income tax on income tax in the monthly meeting on Zoom meeting. So today we are having a very important topic regarding disclosure of the foreign assets in the income tax return. So our speaker is Mr. Rutvik Sanghvi and chairman of the session is Mr. Anil Mathur. Both are very experts and very clear in the subjects, and this and
Thank you.
today we will be enlightened by them. So actually, in regard to the disclosure of the foreign assets, this is a very important topic. So firstly, we need to understand that who has to disclose the foreign assets. Then the issue comes: what is to be disclosed, what is not to be disclosed. Then the issue will come: if it is not disclosed, then what are the consequences? Now, it is also very important. Then, under the exchange of information, the department receives information from other countries also. So, it is very important in that light that whatsoever the information is given in the income tax return, that should match with the information what the department is expected to receive from the corresponding country. So, if it is not matching, then consequences of the penalty, etc., may follow. So, many times we are receiving the notices from income tax department to disclose whether you are for confirmation whether we are holding any particular asset or not holding any particular asset. So in this light, this subject has become very important. So with this background, I request Mr. Anil Mathur to take charge of the today's session, and Mr. Rutvik Singhvi will be the speaker on this topic. So over to Mr. Anil Mathur, please.
Uh, thank you, Gupta Sahab, the chairman of the Direct Tax Committee of AIFTP. Let me at the outset congratulate Gupta Sahab
Thank you,
webinars
thank you,
on practical aspects. So welcome to our learned speaker of the day, Mr. Sanghvi from Mumbai, and all fellow delegates.
thank you, thank you.
Today we have got a very interesting
Thank
topic
you.
regarding foreign assets and income in ITR provided regarding disclosure of these foreign assets in income tax, and the driving force is proviso number 4 and 5 of subsection 1 of 139, which prescribes the disclosure requirements. Probably the disclosure requirements, I think, started because of various committee reports regarding holding of the black money in India. It was expected in 83, 84 that there is a black money to the tune of 20,000 crores. Maybe that's why that's from assessment date 1213, this proviso was inserted, subsequently modified in 2016. Maybe because of the what you call as Swiss accounts or Panama paper leaks, which says that Indians have got around 500% have got a lot of foreign assets. So, in order to curb this misuse of parking of foreign assets in other countries and avoid tax on that, these provisions have been inserted. And of course, there are two different aspects: the taxation aspects and this disclosure aspects. Both are slightly independent of each other. So you have got a calendar year taking at par with the international previous year, and then there are the taxation aspects. A lot of disclosure is there. We have got a separate FA schedule of which Mr. Sangvi will take it, and the table, as Mr. Srivastava has already pointed out, there are so many details available in it. Apart from the assets, even if you are a holder of a bank account, even that is supposed to be disclosed. And penalties, of course, as rightly pointed out by the chairman of the Direct Tax Committee, they are very stringent, of course, correlated to the Black Money Act, which prescribes penalties not only for non-filing of return as well as non-disclosure of the returns. So I don't want to make a chapter very scary with 10 lakhs of penalty or 7 years of regress impairment. So let me hand over the mic because we are already about 5-10 minutes late. Let me hand over the mic to our learned speaker who will way. Minutes for your presentation, and then we can have question answers and summing up by the chair. Thank you. Over to you, Mr. Sanghvi, please.
Yeah, thank you. Sorry, just I missed out on the part about question answer session will be then. How long can I take my presentation for so that I
45 minutes, sir. 45
okay,
minutes.
okay,
If
okay, sure,
if
no
that is okay for you.
yes, yes, yes. No, no. In fact, I think there's some query also, on whether the questions where they will be taken. So
Yes,
I'm
yes, we will
fine with
take.
the questions. I'm fine with the questions being coming in between, but I will try to deal with them as and when, they get the opportunity because some questions may be covered in my own presentation itself.
Right. We will take in the end.
Yes. Yeah, yeah. So first of all, many, many thanks to AIFTP and to all to the organizers for thinking of me and considering me and giving me this opportunity to take up the session on disclosure of foreign assets and incomes. This is an important topic. This is the right timing also. The organizers have considered it to be it's a very timely topic. You will be dealing with all of us will be dealing with this when we are filing the tax returns for our clients, and therefore it becomes an important concept. This issue or this topic I have been taking since 2022 in various manners. And over the years, I have seen the gravity and the importance which has been increased day by day on this particular topic. The reason also being that more and more action, more and more investigation, as both the chairman and the chairman of the session also remarked or referred to, is that this, investigations have started mushrooming up in such a manner that there are almost every anybody who has a foreign asset as once or the other may receive such a notice from the department, and the consequences are quite harsh as compared to what your disclosure requirements are. The disclosure requirement, as we all know, frankly, they have not no direct linking with the income which is offered to tax, and therefore they feel innocent. Just as for any other disclosure requirements, we don't put too much of a stress on it. We say that yes, it's a disclosure requirement, we will disclose it. Unfortunately, the penalty consequences which lie in the Black Money Act on the incorrect or non-disclosure of these assets is quite stiff. As referred already, the 10 lakh rupees penalty is by itself has no threshold, no kind of linking with the value of the asset or the income from that asset, or whether or not there is any black money at all involved or not in the asset. So even if you send through a banking channel and you miss out on reporting, you are faced with the stiff penalty. So this has become quite a concern, and in fact, various fora have actually represented also to the government that this should change. Unfortunately, there has been zero change, and therefore it becomes all the more important that we are very cautious and careful when filing this, disclosure requirement. So, without getting into, let me go into the main details, and I have split my, today's session. Are you all able to view the screen? Then I'll move forward.
Yeah, that's right. That's right. Yes.
Okay. So I've split my presentation mainly into, first of all, the explanatory part about that, why, where, why, what, where, and when, and who are supposed to disclose, as it was correctly pointed out by the chairman, that, who are actually supposed to cover this, why it is required. So all these aspects we will go into. And then there are certain issues which I have tried to take up through case studies. And then obviously why we are doing all this, because there are consequences which are there, which I will try to take up. There are some surprising consequences, not just here, but even stretching into FEMA and PMLA, which I'll briefly touch upon. And then foreign assets disclosure is very famously known that they are all covered in Schedule for FA of the ITR form. What we are missing out is that there are certain other foreign assets and foreign relationships which are to be disclosed in other places in the ITR form, which is also what I would like to cover up. And lastly, some experience sharing, because we have dealt with these cases. So how they are panning out, what is happening in the on the ground, actually, how a person has to represent and what they should be asking from their clients is something which I will cover up at the end. In between, please feel free to raise your queries, and I will cover up as and when I'll be taking my presentation, and in between wherever there is a logical break that I can take. So coming into the 5 Ws, why? Why do we need to do this? So let us go through the genesis, the law, and the consequences. What is required to be reported, the provisions and the issues is what I will cover. Who is supposed to report, which is what is the coverage under the law? It is quite clear what is the coverage. It is only residents who are supposed to cover. not residents, but not ordinary residents are also free from this kind of coverage, which should be kept in mind. And where do we have to report, how to comply, and when do we have to report is also quite important, especially when it comes to certain kind of instruments like ESOPs. When do you exactly have to report? It becomes quite important. So we'll cover all these areas. And coming to first the why. As briefly mentioned here, yes, there were certain committee reports which probably formed the genesis of these kind of requirements. Uh, but going further back, it is in 2008 when American crisis, woke up America and said that there is a massive scale of, misreporting of income, tax evasion, which is happening. And therefore, FATCA was introduced in 2010. We are all today now know that how FATCA operates, and it is such an agreement which requires disclosures by the banks involved. But consequently, every person who holds a foreign bank account needs to sign either the FATCA or the CRS form. So there were several intergovernmental agreements which were signed in. G20 also gave a lot of push to exchange of information. In fact, India was very key and instrumental to this exchange of information happening. Automatic exchange of information with some of these commissioners, when we have discussed, was actually laughed at when India had suggested that. Other countries say that that is not possible, but then India provided a framework which was accepted by many countries, and today we are sitting with an automatic exchange of information. As soon as the transaction is done, the reporting happens from that foreign jurisdiction to the concerned, jurisdiction of the taxpayer. And how that gets linked and how it happens, there is a massive, kind of operational mechanism behind it, which a lot of us are still not fully aware of, because we don't deal with this as a practice. Understandable. But today, this Schedule FA, whatever we report, it gets compared with the data which is coming from this automatic exchange of information. And if there is a mismatch between the data set which we have filed and the data set which is available with them, then the queries start coming. So that is why it has become important to understand our genesis and why and from where this requirement comes in. Then obviously we have the BAPS action plans. There were several action plans which were issued, and then we have the multilateral instruments, the principal purpose test, the limitation of benefits provisions. All these provisions came in because of the whole genesis from 2008 onwards, that they need to tackle the evasion of black money. A lot of, actually, our finance minister at that time had done so many public seminars before the introduction of the scheme under the Black Money Act, that they are getting a lot of data, and that data is going, they have actually not been able to sift through all that data. So they wanted everybody to come forward and submit their, yeah, sorry. Yeah, I think, yeah. So what I was trying to say is that there is a lot of data which is coming to the department, and the government was very clear that if you have hidden black money abroad, please report it into the scheme of the Black Money Act. Otherwise, action will be taken from 2017 onwards, and that is what exactly happened. India has today activated this automatic exchange of information with 96 jurisdictions across the world, including several tax havens. We may not have a double tax avoidance agreement with such a tax haven, but we do have an automatic exchange of information agreement with them. There is anyways exchange of information which happens through Article 26, then the FATCA and the CRS declarations, and then several other intergovernmental agreements which are signed. And CBDT in 2014-15 notified the rules which implement the FATCA and CRS. There we have a clue or a hint which comes from that where these requirements are coming from. You can refer to sections 285BA and rules 114F to 114H for various terms which are defined, which are essentially required by the financial institutions when they report under FATCA or CRS. But that data is something which the government is receiving, Indian government is receiving similar data from foreign jurisdictions, which they are getting day in, day out, and which they are using it to compare to the taxpayer's return. There are also domestic disclosure requirements under SFT, FA schedule, today now TCS under LRS. All this data is coming to the department, in which they are corroborating with whatever we are filing in the tax return. So we have the Schedule FA, which has been introduced since AY 12-13, financial 11-12. Mind you, it is not that it has come after Black Money Act. It was already there in AY 12-13. Then there was a schedule foreign sourced income, FSI schedule, which was also coming since AY 13-14. At that time, people took it lightly because, very frankly, there was no consequence to the non-disclosure. There was nothing which happened if you misreported or if you give something wrong. It was more like a benign provision which stated that you need to disclose. The requirement that a person has a foreign asset then has to file a tax return had come in, and therefore a foreign asset disclosure was required. But if you misreported or if you did a mistake, then there was no action being taken because there was no provision for that. Now we today are in a world where there are several Indians who own some or the other asset outside India. It could be through the LRS mechanism, or there are NRIs who have returned back to India who hold foreign assets but now have become residents of India, or there are several companies which Indians or Indian businesses are opening outside India. Signatory of such bank accounts are people who are resident of India. Obviously, the promoter or the director of such company holds signing power of that bank account of the foreign company. Now that signatory powers also have to be disclosed in the Schedule FA. So we can imagine that the kind of scope is very, very broad, as we'll go in more detail. And as I discussed, as I already mentioned about the mismatch, when the mismatch of data happens, then there is an issue. The competent authority or the nodal point which receives all the exchange data is Joint Secretaries FT and TR in the tax department. They are receiving such voluminous data that they have today appointed or they have created a foreign asset intelligence unit. You may have heard of it, FAIU. FAIU is the one which actually administers all the data which they are getting in reference to foreign assets. They are taking that data, they are sifting through that data, they are actually applying artificial intelligence because it's such a huge data. They have started 14 FAIUs all across India. You can imagine 14 FAIUs. You can imagine the kind of data that they are getting. And each FAIU is housed with several smart officers who are actually looking through that data. There is automatic processing of that data, linking with the PAN, automatic sending of the notice to the taxpayer. The taxpayer gets to see the tax officer, investigation officer only when he goes to report that full data. Till that time, everything is kind of almost automated. So one has to be very careful when dealing with these issues. And while I will deal with in detail, what we have already discussed, there's a very flat penalty of rupees 10 lakhs, which was brought in through the Black Money Act. So therefore, you had something which was not there between the period of assessment year 12-13 to assessment year 14-15. There was nothing. But assessment year 15-16 onwards, they are applying the Black Money Act, the provisions for a flat penalty of rupees 10 lakhs on non-disclosure or misreporting. The only exception is that the bank account, if you hold a foreign bank account where funds are less than INR 5 lakhs, then if such bank account is not reported, then they are not issuing penalty. Mind you, there is no threshold for reporting. If today a person has a bank account outside India in which he holds even just $100, they are supposed to report the bank account in their in their Schedule FA. Now, there is an exception only for the penalty not to be raised, but the investigation does trigger, and that investigation is voluminous and it's quite intense and quite detailed, which I will also explain when I come up later in the experience sharing. But one has to be therefore very, very careful that whatever foreign asset a person holds, they should be getting it reported. And while there is discretion to apply penalty, practically there are officers levy the penalty in almost every particular case. Not just that, they are applying it for every year of misreporting. I think what sir mentioned, briefly before we started is that, is there any limit on this application? Or is it that if you are not reported for 1 year and if you report in the other year, what happens? There have been mixed kind of feedback from the tax officers, but in most cases, if say you are not reported for 2 or 3 years, all the 3 years misreporting on penalty is levied. It has also been upheld by the tribunal in certain cases. And but we will see in certain other cases, the tribunal has in fact said that there's a mistake, bona fide mistake, nothing to be done, no penalty. Unfortunately, at the tribunal level, we have quite a divided view between what has to be the consequence of misreporting or underreporting of the Schedule FA. Probably we hope that when it comes to the High Court level, then probably we'll see some more more kind of proper decisions on these aspects. So I'm sure you've seen several news reports around this, and therefore it becomes very important. The kind of consequences, I already discussed this. The only last bullet point, if you notice, there is a new form, which is a new format of uploading data, is updated return in the section 139 subsection 8 capital A. This particular updated return can in fact be filed for 2 years post the return filing date. That's a very good amount of time we have. And there have been several cases where clients have approached us and told us that we have missed out in reporting in the tax return some foreign asset or totally all the foreign assets, and they would like to now report. Can they do so through the updated return? It is allowing it. There is no bar in reporting a foreign asset, but the problem is that the penalty only exempts disclosures which are made under section 139(1), subsection 1, subsection 4, and subsection 5 of section 139, and not subsection 8A. Therefore, there is a chance that the officers may say that even if you are reported under the updated return, we do not care. Our penalty will still survive. However, in my view, it is still better as a practice to go ahead and file an updated return, come out clean, report, because that shows that you do not want to hide. There is nothing that you are hiding. It is only the fact that you are missed out, and that might help in the appellate level. So it becomes important that one must make note of this new opportunity which is available as per an updated return. So then coming into that, what exactly is the foreign asset disclosure requirement? I think as sir already briefly mentioned that it's the fourth and the fifth proviso of section 139(1), which brings out the legal sanctity for what exactly? For the filing of the tax return if you hold a foreign asset. So if you read, what it says is that the person who is not required to furnish a return under this subsection, but who at any time during the previous year holds as a beneficial owner or otherwise any asset which is located outside India, just to keep it in a very brief manner, then such a person has to file a tax return irrespective of whether he is required or not required to file tax return otherwise. So we'll come to some, kind of typical cases where this gets triggered. But please mind so that there is no legal requirement for disclosure of foreign assets. The disclosure requirement is coming in through the ITR form alone. There is no law which says that you are supposed to disclose foreign assets because there is no such requirement. They're only saying that if you hold it, any foreign asset, you are required to file the tax return. Therefore, when you go to the ITR form, then you refer to the Schedule FA, and then there are amendments in these forms which have been made, and they are saying that there is no separate legislation required for that. Now, mind you, we are having some provision which has come directly in the tax return form. There is no law in the act. The law only says that you have to file a tax return. It does not say you have to disclose it. Now, when we come to the form, there are Schedule FA, which brings in the whole, kind of requirement for it. If you make a mistake in it, or if you do not file properly, then you have the penalty provisions which are getting triggered. In my personal view, I feel that a proper legal provision should have been in place, probably with enough threshold, and then a trigger should be there in the tax return form, which is generally the case. You have a head of income, then you have you are taxable under it, and therefore you are supposed to disclose it very properly in the ITR form, which the logic which is followed in almost every case. However, this is one requirement where there is no such legal provision in place, but there is a very clear requirement as per the ITR form. The only problem there then comes in is that because there is no law, because there is no guidance in the act, therefore we come into, and not even in the rules, mind you, there is no guidance in the act nor in the rules. We get it only as part of the ITR form. So the only source of guidance remaining to us is the instructions to the ITR form. And instructions are largely only focusing on the headings of the tables. They are not going into much more detail. So we are left to guesswork, because there is a lack of guidance that what should be included, where it should be included. Number of queries I get is that, okay, do I disclose here or do I disclose there a particular asset? Unfortunately, we don't have any such concrete official guidance on this. And therefore, we'll have to depend on other sources. What are those other sources? We have commentaries on, exchange of information, guidance notes, rules, which are mandated by the OECD under the CRS requirement. I think those are, one source of knowledge. The other is a guidance note on FATCA CRS, which has been actually issued by the FTTR. It is available in public domain. That gives a lot of good data on how financial institutions are supposed to report on the exchange, on the CRS modality or the FATCA modality. However, the rules under 114F to 114H also gives us a clue, because they are taking definitions of financial interest. They are having definitions of certain terms which are otherwise not covered anywhere in the instructions to the form. Neither the ITR form itself provides any guidance. So that is where you may need to look at for the explanations when you go to that. They are defining certain key terms, and that is how the guidance we can take from them. So what are the kinds of assets which we are supposed to report? Foreign depository accounts, custodian accounts, debt and equity interest, insurance contracts now, financial interest, immovable property, any other capital asset. So there is table D of the schedule FA covers everything, which is as long as it's a capital asset, which gets reported there. Then you have any other account outside India in which the individual has a signing authority, as I already briefly mentioned earlier. Trust becomes a very important tool for them to catch hold of black money, and therefore trust is also supposed to be disclosed by the beneficiary, settlor, or the trustee. And then there is any other income in table G. We have from table A1 to A to F dealing with assets, table G which deals with the foreign incomes that are to be reported. So who is now first supposed to disclose? As I already mentioned to you, reporting is applicable only to a resident and an ordinary resident. But that resident and ordinary resident also includes foreign citizens, except for certain exceptions. Foreign citizens are also covered. So we have expatriates who are staying in India. Those expatriates should be careful and they have to report foreign assets. NOR, not ordinarily resident. For a resident and not ordinary resident and non-residents, both are exempted from providing disclosure of foreign assets. Even after the 2020 amendments of the Finance Act, whereby several non-residents who may visit for more than 120 days or who may be staying in countries like UAE are all getting now covered as an NOR status. They have become they do not remain non-residents, but they become residents, but not ordinarily residents. Even then, there is no disclosure requirement for their foreign assets. So how do you determine who is supposed to report? First, check out whether the person is a resident and ordinary resident. Then he has to get an additional obligation on filing the tax return wherever there is a foreign asset. Then you have to determine the correct ITR form. Then the schedule FA contains specific tables, and therefore you have to determine which table you will report the particular asset. And then there is limited guidance, as I already mentioned, about how to fill up that particular schedule. So let's take a simple example. S is the student who leaves India for UK for studies abroad on 19th August 2024. Now he is a resident of financial year 24-25. He is a resident because he leaves India. He is a student. He is not leaving India for the purpose of employment. So he remains a resident of India. In UK, he opens a bank account and he has no incomes. Obviously, whatever amount is kept in his bank account is only for the purpose of his educational expenses. Now, even if his income is nil in India, he still needs to file a tax return because he has a foreign asset and he remains a resident and ordinary resident. So one of our clients' cases, the poor person had to file a tax return only for the fact of disclosing his UK bank account. Not only that, the next year he came for internship and therefore he was again in India for more than 60 days. And therefore again he became a resident and ordinary resident because he was not coming to India on a visit. He was coming to India because he had not spared any further details. He was coming here for the purpose of his internship and employment. Again got into resident and ordinary resident, again had to report his foreign assets. So that is where one person must be very careful. Several students who leave India, they generally leave somewhere between August to October. And those students, they remain residents in the year in which they leave. And therefore, their foreign assets are naturally opened. Their foreign bank accounts are naturally opened for them outside India. And the moment they open a foreign bank account, they are supposed to file a tax return, even if they have zero income from India. Now, there are certain reliefs, as I mentioned, about foreign citizen who is resident and ordinary resident. It is, it is like giving a relief. Thoda diya, thoda le liya, something of that sort, because unfortunately they have given a relief and then they have put up several conditions. And this is where, I have put it up into this slide that taking all those conditions in mind, the following foreign citizens will still have to disclose their foreign citizens. Those who have attained their Indian citizenship and is an Indian citizen now, so there is no longer a foreign citizen, obviously, but is a person of Indian origin who has entered India with the help of the OCI card, but not on a business, employment, or student visa. Please mind you, the condition that a foreign citizen may not disclose is only if that person has a business, employment, or a student visa. So many OCIs who come to India, they don't come on a specific visa. Their OCI allows them to enter India at will. Therefore, they cannot take support of this particular exclusion. The person who is a foreign citizen but on a tourist visa, who has not come for those specified visas. that also person has to report. A foreign citizen who has a foreign asset which was acquired when such person was a resident of India. So I'll explain why. And finally, a foreign citizen holding a foreign citizen acquired when a foreign asset acquired when he or she was a non-resident of India, but there is an income which has been derived from such asset during the relevant previous year. Why I'm saying that all these people need to report their foreign assets is because the exclusion applies only if the person is a foreign citizen, is on a business, employment, or a student visa. The asset was acquired when such person was actually a non-resident and not when they were a resident, and no income is derived from such assets during the relevant previous year. If only all these conditions are met, then only a foreign citizen is not required to file a tax return, not required to disclose the foreign assets. Otherwise, they are supposed to disclose the foreign assets. Now, coming to the fifth proviso, which also sir referred to and which is an important proviso, it provides an exception from the applicability of the fourth proviso, which referred to the tax return filing in case of a foreign asset. It says that nothing contained in fourth proviso shall apply to an individual being a beneficiary of any asset located outside India where income, if any, is includable in the income of the person referred to in clause A of the proviso, which means that the person who was supposed to anyways file a return. Now let's take this through an example. This is, typical for minors. So let us say a father and a son, both are resident and ordinary resident. The son is a minor. The minor's son obviously has received a gift of funds from his father, and he has invested 1 crore abroad in an asset abroad. Possible because under LRS there is no bar on minors to also invest outside India. So under LRS a minor is also sent. Most high net worth families today utilize their LRS limits to the fullest extent by including even their minors. Now, income tax perspective, if there is an income of 10 lakhs which is earned, it will be clubbed obviously in the father's income tax return. Whether the minor son will have to file a tax return and disclose the details. What does the fifth proviso say? The fifth proviso says that it says that it is not required to be done, but by an individual who is being a beneficiary of any income, but is therefore is includable. His income is includable in the hands of a legal or beneficial owner of the asset. Now, when it comes to clubbing provisions, the father is not the legal owner. Father has given a gift of his funds to his son. The son is the rightful legal owner of the asset, and therefore this particular fifth proviso actually does not apply to a clubbing provision kind of scenario. But unfortunately, there is no way a minor can actually even go ahead and file the tax return, because we tried and attempted to do it for one of our clients' child, and that person, when we tried to do it, the particular issue which came up was that only if the minor has income of its own, and that is income which has been done out of his or her skill, then only a tax return can be filed by the minor, otherwise no. Now, if the minor cannot file the tax return, how will they disclose the foreign assets? This is an issue which I had a personal discussion with the DGIT systems at that time. I referred to them this point. They referred to me that you please report it under the parent's particular Schedule FA, because there is no way that they can probably enable a minor to file a tax return. I told them that the reporting which will come from abroad will come in the name of the minor, because a minor's reporting will be done. It is not in the name of the guardian, because even if there is a guardian reported in the particular foreign asset, in several jurisdictions, the minor's passport is also provided. And the minor's passport is what is linked to the asset disclosure. And then they are brought to India. They are supposed to disclose in India. So this is where I had highlighted even then that this may create an issue. Unfortunately, it did become an issue. In last year, there were several minors who were raised, several notices were raised. And not just that, in one particular case of Nirmal Bhanwarlal Jain, the disclosure not having happened in the father's ITR form, the father was levied penalty for both the daughters, minor daughters, assets which are lying outside India. Can you imagine that? Have you ever checked with your client that if your particular minor son or daughter has any foreign asset, please let us know so that we club it? It's now become a norm. We need to check with the client that do they have any such asset, then we need to disclose them, because in this particular case, the funds were not any black money funds. They were actually funds which are sent through the bank account from India, and still a penalty was levied of flat 10 lakh rupees for all 3 years of non-disclosure for both the daughters, and all these penalties were levied somewhere around 60 lakhs on the father. This has been upheld by the tribunal. So we may need to be very, very careful. Coming to the foreign assets disclosures, I know I'm going a bit fast. I have limited time to cover a particular number of slides. So I would encourage more, queries. If there are any questions, I would like to take them up. and I will take them up. Yeah, I think there is one query already. I'll take it up as I go ahead. Now, these are the breakup of the schedule FA, which is there at present. I've already briefly touched upon it earlier. So let me go ahead and take up where there are general issues of what one must keep in mind. The focus is on disclosure. Please bear in mind that do not, try to, kind of be, I would put it this way, question too much that, okay, why should I disclose it? Where, I don't want to disclose it, because clients have innumerable times told us that, why do you want all this data? And we have told them that this is a disclosure requirement, please. And certain times they also come back to us saying that there is no income earned from it. Then why should I disclose? That is not the intent. The intent is that there is any asset lying outside India, please disclose it appropriately and properly. Uh, the disclosures are not equivalent to the foreign asset balance sheet. I'll give you certain examples where that's not the case. Already we had one example of minors' assets being reported in the parent's tax return form. So it is not exactly the balance sheet that you have to report. They may be different from your total income. There may be no income earned from such foreign assets. Does not matter. Still has to be reported in the Schedule FA. Most importantly, please maintain necessary explanations and documents which justify the reporting and the mismatch, if any, which you predict. Because, say, for example, you have certain data mismatch. You are supposed to file the tax return from April to March. The asset has to be reported for calendar year ending 31st December 2023 for the current year. Now, all this reporting mismatch is better to explain. We are going into detailed notes with explanation of the foreign exchange rate, which is probably applicable because even that is not exactly covered in the ITR form. The source details, if there has been a change, if there is a likely mismatch, then explanation is better because these queries will come 2 years later when to find that data becomes very, very difficult. Coming to conversion into INR, unnecessary burden. They could have just asked you in forex terms, but they are not. So we have to provide it in INR terms. Leads to confusion. They are asked for SBI TT buying rates. You may not have for historical assets which are purchased 20 years back. Where will you find the SBI TT rate? We have taken the stance of taking the RBI rate or adopt a rate, any rate from a foreign exchange rate website, but mention it. Keep it in record that this is where the rate we have taken from. This is for disclosure. This is not like on the basis of which we are submitting income to tax. So coming to the first table, A1, foreign depository accounts. People, it's quite clear here. We have to report the bank accounts here. There is some confusion. Some people feel that we have to also report the custodian demat accounts. No, depository accounts only cover the bank accounts. And that is clear. It covers any commercial, checking, savings, time or thrift account. Any kind of deposit, if you have fixed deposit, and that also gets covered here. So then where does the depository account get covered? It gets covered in the custodial accounts because they are securities held by somebody else by them or held in custody by somebody else on your behalf. Those are custodial accounts. Custodial account means that account for the benefit of another person that holds one or more financial assets. That excludes the insurance annuity contract because that is separately covered. But this is where we need to report the demat accounts. And please mind you that there are several details that are to be reported. You have the account number, the zip code, the address of the financial institution, the status, when is the account opening date has become very important. They want to know when the account was really opened. Peak balance during the period can be quite different. You may have invested through your depository account, or meaning essentially your securities. You may have invested at $100 value. During the year, it could have volatility, could have resulted it into raising to another, say, for example, $150. The peak balance reported by the depository and the custodials is the market value. You may have noticed it in several foreign, if you have got a chance to look at the foreign depository account statements, they do not bother much about cost. They bother much about reporting the market value because they are essentially wanting to show to the customer that their market value has increased. That is what gets reported, and that is what you may have to report here so that at least the data matches. Now, when it comes to income, you may still go by whatever is the actual income earned and nothing more. That is something which you will have to take discretion, and proper, filling up of data has to be done very carefully in those cases. Then we have the table A3, which relates to equity and debt interest. There is no definition for what do they mean by foreign equity and debt interest. In my view, it very clearly does not mean investment in shares or debentures. That would get covered in the table B and or under table D. This, as per equity and debt interest, what it means is that equity interest in an investment entity, which is only an investment advisor or investment manager and are not financial accounts. This is something of a weird, meaning. But what they're trying to cover is a kind of an kind of a reference to where where investments are layered. See, their whole focus is to catch hold of black money which is lying outside India, and this is where the whole CRS, the FATCA. So globally, their focus is on layering of entities. So you have a partnership firm or a trust through which you are holding certain investments is what is supposed to be disclosed here, in my view. Though a lot of people invest in report even the equity holdings here, in my view that gets covered in table B or probably table D. Finally, there are a lot of people who have taken foreign insurance contracts. So this is where, returning Indians, so NRIs who return back to India, they take various types of insurance contracts. Some take it for, obviously the life and all that. There are some who take up pure investment policies. There are some who take it up only for the payment of their estate duties. Now, all these kind of insurance contracts are supposed to be reported here in the table A4. And again, there are several contracts, including the date of contract, the cash value or the surrender value of the contract, which is not easily available, is something which you must tell your client that please ask the financial institution for that and then get it from them and fill it up over here. Coming to, financial interest. Now, this is table B, which is in fact the table which is most cited in the notices which are coming from the investigation wing from the FAIU. Financial interest would ideally, this is in fact the only table which has got the definition in the instructions to the ITR form. What they are saying is that they refer to is that there is anybody who is a resident, who is an owner of record or holder of a legal title. Again, here, what they are referring to, and in simple terms, I would put it is they are referring to is that something in the sort of that it is your asset, but somebody else is holding it in your name. It can be an agent, it can be a corporation, it can be a partnership, trust. That is what their aim is. Simply put, if there is any kind of financial investment outside India, you can put it up into this financial interest. In my view, it refers to wherever you have some voting power, wherever you have some control in that particular entity. So we have cases where NRIs who return back to India, they famously hold most of their investments in a personal holding company, PHC. Now that personal holding company would hold further investments under it. Now that personal holding company, in my view, gets reported here in the financial interest in any entity outside India. This is where you need to report that. But then you would say that where do I invest? I have invested in say listed shares. Then where do I go it? That in my view comes in table D, where they ask for capital assets, where capital asset reporting has to be done. In whatever is reported in table B does not need to be reported here. Obviously, business assets also do not need to be reported here, but all other types of capital assets need to be reported in table D. I have skipped one. I know that. Coming back to table C, details of immobile property. The value of the total investment in the immobile property has to be reported here. And there is a certain issue. What happens if the property is sold after 31st December? Say it is sold between January to March. The capital gain you will actually give to tax in the tax return for the resident and ordinary resident. The asset was held as on 31st December, so you will report it. But what about a capital gain? Can you report it or not? In my view, you may not report it against the immobile property because it is not a rental income which is earned from that particular immobile property, but capital gain, which would go under table G. Table C will also have to be reported because even though on the return filing date or as of 31st March, you do not hold that asset, but as of 31st December, you did hold that asset. So it is better to report the asset. The income can be reported separately in table G. One very important point we have recently seen is that several people will try to keep their assets in the joint name with their spouse. So you may have somebody who is, said that, okay, he is a non-resident. We had a typical case where the client was a non-resident, but his wife was a resident of India. Now the client said that out of natural succession, keeping succession in mind, he said that I want my wife's name also to be there in the property, and he just added the name. What he did not realize is that the foreign jurisdiction, because there was no investment made by the wife, the client, did not bother to tell us and told us that, there is no requirement. Why should I tell you? Because it was only for the sake of convenience, for the sake of succession planning. What got missed out is that the foreign jurisdiction reported the wife also as an owner by default because the name was there on the contract. they reported that name to the tax authorities. The tax authorities sent a notice in probably less than 6 months of this particular acquisition. Not even six, I think. Yeah, 3 to 4 months max, in which the notice came asking for all the details about what foreign assets are held abroad. Now we are in the process of replying to them. So one must be careful about, while we will obviously have the mentality of, looking at succession first, and which is natural and has to be done, one must be careful that full reporting is also done accordingly. And maybe you can explain that there is no investment made by the wife, but at least the disclosure should be there. Otherwise, you are at the risk of losing 10 lakh rupees in penalty. Then we have the details of accounts which your signing authority. As I explained to you, it could be a director of the foreign company who may be holding the signatory to the foreign bank account. Again, the whole substance or behind this, or the reason behind this, is because several people will say that they will have a foreign company which is in the name of somebody else altogether, or some professional firm's name. But the bank account is held as a signatory by the Indian resident. They want to catch hold of such people, and therefore genuine people who have actually done overseas direct investment from India. They have opened a subsidiary of an Indian company abroad, but they are directors in that foreign company and therefore hold signing authority. They will still have to report both the account, not just the account number, but also the peak balance. And therefore, if say some manager is made a director of that foreign account, then that person will have to get the balance, will have to report the peak balance and investment made during the year of such account, even though he has no inkling, nothing to do with the foreign business, except that he is an employed manager. But still, he will have to report everything under the Schedule E. And coming finally to a trust issue, which is the last foreign asset category, the G law table covers incomes. Let me show a chart in how a typical trust structure looks like. We have a discretionary trust, maybe housed in a tax haven like Panama. The legal owners, as you can see over here, are the trustees. I don't know if you're able to see my scroller. Yes. So,
Yes.
okay. So the trustees is a Panama trusteeship company. It's a professional company. Beneficiary is the secretarial staff of the Panama trusteeship company. Okay. The settlor is a Swiss bank or some financial institution. So you can notice none of these are referring to any people who are connected with India. The gift of funds comes from that because this settlor it is settling the trust only with $1. But there is a gift of funds which comes from layered sources, unknown sources into this discretionary trust. The letter of wishes, which is outside the trust deed, there is nothing and no reference to in the trust documents. That letter of wishes is only lying with the trustees. That covers all the actual beneficiaries of the particular trust. Now that discretionary trust has some bearer shares, meaning shares which can be taken and moved from place to place, and therefore they are called bearer shares. And those bearer shares are held for a private limited company in India, whose directors are again the Panama firm, but holds several investments in immovable properties, shares, securities, art, jewelry, etc. This is a typical trust structure. If you go to a tax haven, they will tell you that this is how it all gets up. And this is what has been caught in several leaks. Reference was made by sir about the Pandora papers, Pandora leaks, Panama papers. These are several such kind of leaks which have been brought out, and in fact they are kind of almost like storytelling. If you get to read about what has happened and how it has happened, in fact the international journalists, the international journalists against these tax crimes, they have a website which lists down all these leaks and give detailed of how the corporate structures have actually happened. Very interesting read, but the point is that this is what they are targeting to cover even under the foreign assets schedule. So let us look at a case. Mr. A, an NRI, has settled shares and immovable property in discretionary trust for US inheritance tax purposes. He is not bothered about saving any Indian taxes. He is a person, an NRI, who has done it only for the US inheritance tax purposes. It is quite allowed there. There are certain structures for doing that, and he has done it way back in 1990. Now, on retirement, Mr. A has moved back to India to settle for good. Now, trustees of the trust are his son and daughter, AB and AC, and the beneficiaries of the trust are the children of AB and AC. All of these people would have to disclose their their disclosures as far as this foreign trust is concerned in table F of their tax return form, if all of them are or any of them are residents in the residents as for that particular year. I'm crossing my time limit, so I'm sorry, I'm skipping some slides. Table G gives you details of
Take 5. take 5 minutes more if you have got some.
Okay, sure. Thank you. So table G covers details of any other income which is to be derived from any source outside India. Again, this income you may have to refer to from that, not for, from the fact that this does not cover. If you look at the title, it does not talk about a year ending December 31st. It is any tax, whatever income is taxable in your hands has to be reported in this as long as it's a foreign income. About the discussion or disclosure about when it should happen, a typical case is about ESOPs. ESOPs are granted but not yet vested. Where do you actually disclose and when do you disclose them? In our view, on granting by itself, ESOPs need not be disclosed because they are contingent assets. Nothing has happened until you don't vest your asset. ESOPs do not vest into you. There is nothing that you have to report. There is no particular asset. If the ESOPs are vested but not exercised, then I would strongly feel that the options must be reported because you at least have some foreign asset in your name. It may not be tomorrow exercisable because when you actually go to exercise, the value may be lower. That doesn't matter, but you today at least have a vested option, a right in particular shares. The same would go for ESPP, RSUs, PSOs, meaning different types of ESOP instruments, but still they must be reported for the purpose that tomorrow if there is any sale which happens, then you are at least covered that the disclosure requirement has happened. There are several people on whom these notices have gone because of not having disclosed their ESOPs. If you feel that on granting itself the person would like to disclose, please go ahead and disclose. There is no problem. As I explained again, that disclosure, you can be as conservative as possible, and therefore may not, otherwise you may be faced with a huge penalty. The coming to an holding structure analysis, where you have an person who is, say, Mr. A and Mr. B in this particular example, they own an Indian company Xco, and Xco holds Yco, and Yco holds Zco. Now, A and B are resident individuals. Are they supposed to disclose Yco and Zco? This is what a particular question on which there was a news report where the tax officers had clearly said that they want to know the indirect investments and they wanted to know that there is a disclosure even for such assets. This has, however, been shot down by the tribunal decisions in Krishna Das Agarwal and additional CIT versus Jatinder Mehra. I have cited that. And there is one more, Union of India versus Nirayu Private Limited. In all these cases, they have tried to say that no, you cannot ask somebody to report the second or the third level because that is not the asset of the Indian individual, but of the asset of the particular company. But as it is clear that this is litigative, you can see very clearly that it is litigative, and therefore it may make sense that if you need to, then you please show the underlying investments also, because your ultimate beneficial ownership criteria is met by the individuals concerned. So several foreign jurisdictions, when it comes to FATCA and CRS, will ask Mr. A and Mr. B, who are ultimate beneficial owners, to give their passport. Once the passport is given, that is reported to the Indian tax department. So you better be careful. I'm skipping some of these slides. Foreign incomes we already discussed. Consequences we already discussed time and again. But what I wanted to bring out is that if there is a revised return, maybe there may be no penalty levied. Then thankfully we have a Karnataka High Court decision. I have also mentioned those citations here. Then no penalty in case where the case is a bona fide case. This was a particular case where the person had inherited from their mother, and there is some ambiguity. Intent of the legislature is to exclude trivial cases, is what the decision held. The Mumbai Tribunal in Neena Gandhi Tiwari's case deleted the penalties. But even in another two cases, Shobha Harish Thawani and Nirmal Banwala Jain, which I also referred to earlier, even if the investments went through the banking channel, they still told that no, you should have reported, you should have disclosed the foreign assets, and therefore the penalty was levied for each year of non-disclosure. And then there are certain cases again. So as I told you, there is a mixed and a very divided view over several decisions. This is Ocean Diving Center Limited versus CIT, again a Bombay Tribunal decision where they say that Schedule FA may not be reported, your asset may not be reported there, but it has been reported in the balance sheet, it has been reported clearly in the foreign, FEMA compliances, and therefore penalty should not be reported. Penalty should not be levied. So that is what it is quite, divergent views across the board. I have certain other, issues which are there under FEMA and PMLA. On non-disclosure, FEMA, if you do not comply with Section 4, Section 37A, have become very, very cumbersome. One must be very clear. Venkateshwara Hatcheries Indian assets were seized because they did not fulfill the FEMA compliance. Similarly, for PMLA, it is a scheduled offense if your offense is under Section 51 of the Black Money Act. A non-disclosure took them to PMLA, and PMLA was levied in the case of Offset India Solutions. A very interesting case. One must read it. But therefore, an importance of foreign asset disclosure becomes quite a lot as far as these kind of cases are concerned. I had mentioned there are disclosures required. Reporting of unlisted shares, we believe that it is only for Indian shares. No, it is not only for Indian company shares. The circular number 18 of 2019 has very clearly said you have to report it for foreign unlisted shares also, unless they are reported on a foreign stock exchange. So surprisingly, they are asking for that, and one must report it. Disclosure of directorships. If a person, Indian resident, is a director of a foreign company, then they still need to disclose those directorships in the particular schedule for directorships. In fact, even non-resident is supposed to disclose if they have a nexus, if that particular company has a nexus with India. Surprising, too far-reaching, but they are asking for it. Exempt income schedule includes a particular clause for incomes which are exempt due to the DTAA. So the foreign incomes have to be then reported over here in the exempt income schedule also, as also in the table G of schedule FA. And finally, coming to schedule AL. Schedule AL earlier did not cover any assets which were reported under foreign asset schedule, but now that has changed. They have said that even if reported under schedule FA, you need to report your foreign assets into your assets and liability statement. Obviously, the trigger is only if the individual crosses 50 lakhs of income. However, one needs to still report that. There is a detailed requirement for a stay in India or outside India for the residential status. One must be careful about choosing particular status. Very carefully do it. One new requirement which has come in from this year's ITR form, which we noticed, is the type of Indian bank account now needs to be disclosed. So you have those bank accounts, right? We have the schedule where you have to report your bank account details. There is one drop down where you have to now select whether it is a savings account, an OD account, a current account. In that, there is one non-resident account also. Several NRIs still hold certain accounts as resident accounts. They don't convert them into NRO account. That also may become an issue because they are supposed to now show what type of account they are holding. Otherwise, any NRI who holds an Indian bank account, which is an NRO or NRE account, they may need to select it as a non-resident account. There are other compliances which impact. I'm not going into those, with kind of data, or sorry, the time which we have. But I would like to definitely share that whatever experiences we have had in these cases, one primary requirement is the historical data and documents. Clients come back to us and tell us, no, I don't have 12-year-old data or 15-year-old data. The commissioner has shown me a stack of almost 40 files, which he said we have not closed the investigation because none of these cases the taxpayer is able to prove that that person was a non-resident when they opened that particular account. And unless they are able to prove that, they said we will not close the particular investigation. So it becomes very important. Persons who are even NRIs today and they may in future want to return back to India, please tell them very clearly that you need to maintain full assets and full documentation, because in India they do not believe anything other than documentation. One of our clients has spent, I think, a few thousands of dollars and still not got the data of the opening statement because the bank just refused that we don't have any data more than 7 to 8 years old. Another issue is that where you have made a mistake, please admit it. In fact, in one of the cases, they actually did not levy any penalty. They levied a zero penalty because they said that, yes, you have paid up the full tax, everything has been disclosed, and therefore we are not paying. At the same time, as I already mentioned, be very careful about certain reporting issues like joint names, minors. I already discussed that with you. I'm just sharing what kind of details they're asking for. As I mentioned to you earlier, if you have some small bank account and you don't report it, uh, what happens is the scrutiny kicks in because they are not able to match the data. They start asking for data. What kind of data? Right from 1st April 2015, they will ask for your entities in which you are a director, shareholder, trustee, copy of your passport, residential status, all this from 1st April 2015, mind you, dates of departure from arrival, then foreign asset details for each of the particular tables, bank and demat accounts, all of those, including the details of the introducer or the guarantor for that account. Then coming to the details of holding of their assets, signing authority. Not only that, they are asking the name and addresses of the service providers. Who provided you this particular service in incorporating that foreign company? Details of bank or demat account of the offshore entity, not just your bank account. If you have an offshore entity, that bank account, including accounts which have been closed or are non-operational. Can you imagine? Of the foreign entity, not yours, of the foreign entity. Then copies of those bank statements, details of the service providers of that offshore entity. Can you imagine? This is the kind of data that they are asking for. Therefore, my concern that you should be very precise and very careful in when you are reporting to the foreign asset status. We have had cases where people have goofed up in the residential status reporting because the client gave incomplete data. So be shameless. Tell the client very clearly that if you do not give us data and if you miss out, this is the penalty which is applicable. Therefore, because tomorrow the client will obviously tell us that why you didn't ask us, better to show them the foreign asset schedule and tell them, please see this. There are hardly any instructions on this. So if you feel anything falls within this, then please give us the data and be careful about that stay details, because some of them are now becoming NOR. There's a confusion on that. You must not, because we had one client came to us after the notice was issued, demand notice was issued. The reason because they miscomputed the number of days stay, and the person become from NOR, he became a resident and ordinary resident, and then therefore the kicked in full details of reporting the foreign assets, and they have full details with them. So please mind you, when their notices come, don't be of the idea that they don't know. They know almost everything, with relation to their foreign assets which are held by the client. So finally, be very conservative. Proper documentation, explanatory notes can be prepared. FEMA issues may also be covered because there is what is obviously there. It's a cross-border transaction. Is there FEMA compliance done or not? That should be taken into account. Many thanks. I have hurried it. I have really brushed it in a very fast manner. I'm sorry for that. Yeah. Thank you for a patient hearing.
We have extensively dealt with this subject.
Yeah.
If you have got some question, I mean, you said you have got one question that.
I think somebody has mentioned. I'll just take it up in the chat box.
Hello.
Yeah, one of my client
Yeah.
purchased shares of foreign company in March 24. The schedules provide the data as on year ending 31st December 23 to be declared. What to do? You do not need to disclose in the foreign asset schedule because the client has purchased the shares only in March 24. The fact that if there is any income which is earned, dividend or whatever, then that income has to be reported in table G. But otherwise, these asset purchase shares do not need to be disclosed there. It can be disclosed in the next or the current financial year's tax return filing. There was, sir, if we have notice from ADIT and thereafter the SSE files updated return, can penalty be avoided? Unfortunately, updated return by itself cannot be filed if there is a notice which is already in existence. But even if you file, as I mentioned in my presentation, updated return does not absolve you from the penalty. It only probably might help when the appeal stage comes to show that you have kind of done your duty of reporting, whether through updated or revised return. Problem is if it is after the notice has been issued, generally speaking, the penalty may still be levied. There is no escape route for that. I think these are the only two queries I have.
Just taking your presentation regarding multi-layered investment abroad. I mean, if two individuals have a share in Indian company and that Indian company has an investment in foreign company, direct investment, I mean, do we?
Yeah. I'm sorry, I missed your question at the end. Do they need to report? Is what
There are two individuals. I'm not audible now.
Sorry, it was
two individuals.
Yes.
My voice is breaking. There are
Yeah.
two individuals who hold an investment in a company, private limited company. That company holds investment in a foreign company. So, do the individuals, as per the scheme of things, I think they are supposed to disclose the investment which the foreign company has in the
Yes.
investment foreign company by Indian company.
As I explained you, there are two tribunal decisions which have held that you don't need to report. But the fact that it has been litigated upon shows that the officers want you to report. So, out of abundant caution, we are going by the fact that wherever their passports are given to whatever limit, it may be that that foreign company has another foreign company, maybe 3 years layers down. Then also, if their passport has gone, which means that the reporting will happen of those underlying investments to the Indian government, then you may as well disclose, because this is only disclosure, nothing turns on it. People come back to us and clients tell us, it will be repetitive. You're reporting the first company, then you're reporting the underlying investment, then the underlying. So all this will make it very, very voluminous and it may appear as if I have too many assets. No, it's okay. We can explain everything. But as long as they get the data matching, they see that that particular asset has been reported, then we have had issues where in these kind of cases for years on end we have not received any notice, because as long as the matching happens, therefore then there is no notice which comes to us. I hope
Just
I'm able to answer.
two questions which came to me directly. I think even the question was whether HUF is also covered as a for reporting
Yes.
requirement.
Yeah.
It is
Yes.
because it is covered. And where the disclosure requirement is required in case of a partnership firm abroad or member in the LLP, where the disclosure requirement, which table the disclosure requirements are there.
Yes.
It is in A5 or
Sorry. If
if
you can just repeat that question, meaning it is regarding a foreign LLP, right? Is what you mentioned?
yeah.
It
You
will be
heard for
table B for a financial interest in any entity.
and I think you already covered. There was a question that if somebody holds a foreign asset for a part of year only, sold before reporting date, then does
Still have
the
to report. We have cases where people have bought in February and sold in April, but still the reporting does get kicked.
report? Right.
I
So
think
thank
there
you
are
very
a
much.
couple of more
I
questions.
recommend
Should I cover them? There are a couple of more
National
questions.
President, Mr.
Yeah.
So would you like to share some views, Jen sir?
Thank you, Anil Mathur sir, and our learned guest speaker, Mr. Rutvik Sanghvi, has explained it very well. And I am little bit aware of this subject because my daughter is staying in London, so she had to face these problems. And since she had gone from India to UK, all these details had to be filed. And here in India, the fees per professional is not much. We count in thousands. But there, the professionals are counting in lakhs, Indian rupees lakhs.
Yes.
So that makes the whole difference. But then compliance is a must. So that compliance had to be made by her also. So this subject is very important, and I will request Rutvik to kindly also write a piece of article on that. And
yes, sir. Sir, we have already written a book on this whole topic.
And book I know, but if I can get a copy, I would be obliged.
Sure,
and
sir.
our chairman of the committee, Mr. VP Gupta, is also with us. And despite his busy schedule, still he has come. So we would like to listen to him. And yesterday only there was a big function in Delhi. I was also invited but could not go, and I beg excuse. But I wish you my best wishes for the occasion to you and respected Bhabiji. And our friend Sri Srivastava is also here. Friends, I will not take much of your time. We are 66 people going to Malaysia tomorrow on a AIFTP international study tour. And I think we will also learn something from there and we'll share with you. And in future also, we would like to listen to the learned speaker, Rutvik Bhai. And Mathur Sahib, if you can kindly request VP Gupta. Thank you.
Thank you, Jain Saab. In fact, I was in the beginning also. Probably at that time you had not joined. So I thanks a lot for your blessings to me and wishes for the yesterday function. And Rutvik has done very well. I was hearing him, so he has covered in a very detailed manner. And all the people who have joined today will be benefited by his lecture. So I thank and appreciate his preparation on the subject, and it is really beneficial to all of us. So thank you very much. So Mathur Saab has very well conducted the session, in fact, and in the last also, I will request again to him summarize the things and then conclude the session, please. Thank you very much.
So may I just raise Mathur
Sir.
to Mr. Rutvik.
Yes, sir.
See, the problems have looked to be many, and they seem to be a bit complicated rather than the simple ones. So what is the easiest way, or what are the precautions that a taxpayer or a council has to take the moment you get a notice under BMA, especially in with regard to non-disclosure?
Yes, sir. Sir, I think as I mentioned in one of these points, that the admittance of the mistake
Yeah.
and the fact that you have paid up the full tax, there is no black money at all involved. It's only a non-disclosure issue. Should be put out well and very well into the reply which is made upfront and quite with a preface saying that there may be honestly a mistake only and then nothing more. We have seen that by far, if the black money is not involved, then their whole inquiry and the investigation deflates. They only are focused on the fact that whether there was a black money or some hawala done from India or not. That is their focus. Now, there can still be a issue about penalty, but I believe that when it comes to appellate level, it can be a very strong ground for deletion of the penalty. We have had some few cases where, in fact, at that stage of the officer stage itself, the penalty has not been levied. The reason why, because they have said that yes, you have reported later on also. See, there is some fear which people have. I have not reported for last 2 or 3 years. Should I report now? I would strongly suggest yes, please start reporting. Even if it's in the past not been reported, it shows that before a notice comes, if you report, it makes a whole lot of difference. Then later on a notice coming and you trying to justify that why you are not. And so the preparation is data and documents. I'm sorry, but the documentation is very key. They are not.
Srivastava, everything depends on the facts and intentions of the person. In fact,
that is why. No, that is why I said.
So you can't generalize. The notice will be received. You have to reply. You have to justify that. What has been the reasons? What has been the facts? What has been the source of your income? So all that has to be given.
True. That is what I was trying to find out. That the moment a notice has been received, what is the safest way, the next step to be taken?
Yes.
You see, and as it is, when the moment we start off with the Black Money Act, the first impression that I will get is that this has something to do with the generation of black money.
It is
either
not
generated here or generated maybe generated and stashed outside India, and that is what is the whole objective looks like. But then it, like in other provisions of income tax, where like 269 SS, 269 ST, etc., where they say, okay, there is no black money involved, and the penalties are straight away dropped. So that way, is there any easy way out under this BMI to be the first to be taken as a first step of reply?
Yeah. So as I explained, we have actually taken the course of introducing the taxpayer, looking at his past about how they have always been diligent in their reporting. How, if say, for example, in those few years they have not reported, and later on they have, and the fact that there is zero black money involved, all this go to a level of at least being appreciated upon the fact that there is nothing malified in the whole, mistakes. And there are several such cases, ESOPs. People are innocently not reported. Retirement benefit accounts. So many people have forgotten that, their account also had to be reported because they are not getting taxed in their foreign country on that income. So these are several such cases where, it is innocent mistake, which can be brought out very strongly at the very front, and then give the data. Give all the data that they are asking for. We have seen in those cases, at least there, they don't have any reason to then kind of accuse or suspect that there is something wrong. At least that I would feel so. I would.
It is also very important in this cases that experts should be consulted. It is not that the SSC himself replies the notices, so that creates a problem because he will not be able to reply properly, and that creates later on difficulty if his answer is not given in a proper manner. That is very important. So that care should be taken by every taxpayer whenever the notice is received, because consequences are very serious. So it has to be handled very carefully.
Very true, sir. I fully agree. We have seen replies going by clients in 1 or 2 lines or 1 word. And
that is the difficulty. Later on, it becomes very difficult to handle the situation.
Very difficult. You're right, sir.
Yes.
You have got two draconian laws going parallel, PMLA and BMI going parallel to each other along with FEMA. So you have to be ultra cautious about it. I mean, you don't have any escape routes. Was there any, for the first time declaration, there was a provision and earlier with this Black Money Act for some amnesty or something like that?
No, I don't
when
think
it was
so.
Introduced.
For the black money declaration itself.
Yes. At one stage, this option has come. Mathur, in the beginning, I think in 2016 or so, the scheme had come. You could declare and you could pay the tax.
First time declaration.
Yes,
First time
at that time
declaration
the
only
scheme
in
had come.
2016 they were there.
Yes, it has
That was
come.
there.
At that time you could pay the tax and disclose it. But later on there is no exemption, no scheme, nothing like that.
Yes. Post that there has been no. In fact, they're asking
Yeah.
also data from AY 15-16 onwards, because they also know that with the Black Money Act having come into play, even
Yes.
if past you have not disclosed, that still is a, because they also feel they will not be able to raise penalties on those cases. But AY 15-16 onwards, definitely they're asking.
So thank you
So
very much. With this, we come to an end. I think everybody has been very beneficial to the subject, and I pay my heartiest regards to the learned speaker for very well dealing with the subjects, and thank you very much to my elder brother VP Gupta Saab for continuously serving the profession, AIFTP being the direct tax chairman,
thank
and
you, thank you.
come up with another scheme. नारायण जैन सर ओनली वन थिंग वन रिक्वेस्ट सर, आपको अगर ऐसी वो आया करे ना इनविटेशन, तो सर आप मेरे को डेप्यूट कर दिया करो वहां दिल्ली दिल्ली जाने के लिए. वीपी गुप्ता साहब दोबारा
अच्छा
किसी
सर,
पार्टी का
one
भेजे.
one
नहीं,
I
small
can
नहीं,
deputize on
information.
your behalf, sir.
One
नहीं,
small
नहीं.
information
Thank
I
you.
would like to share.
Yes.
Gupta ji is here. 22nd of July, the union budget is scheduled to come in Parliament. So we would like to discuss at least once on Zoom the implications of various direct tax proposal in the budget. And if the budget is having many provisions relating to tax, then we may be having 2 or 3 programs also. So first program, if Gupta ji agrees, we can do on 24th. 22nd budget is coming, 22nd, 23rd. Speakers may prepare themselves on various aspects. And the speakers also, Gupta ji kindly fix up good speakers. And of course, you are there, and you may decide among the people who are interested. Srivastav Saab can be also part of panel. So 24th, should we have it at 5 o'clock?
Yes, sir. One suggestion. Well, I understand that you and Mr. Rajesh Mehta had already talked to Mr. Girish Ahuja, but he has not given any time, and he prefer the in a physical form rather than virtual form.
Yeah.
So Rajesh Mehta told me, and I have also sent a message to Mr. Girish Ahuja to give some date and do it virtually. But I don't know whether he will agree or he will give any date and all that. But as a alternate, my suggestion will be that we have a lot of people in our organization itself,
Yeah.
like Anil Mathur and D.K. Srivastav and the other people also. So what we have been doing in the other firms also, that 2-3 persons we have done in central zone earlier, we had done in that way.
Yeah.
So that is a 3-4 persons divide the part of the budget, and then relevant provisions are discussed, and we should have the program at least for 3 hours. Because when we are taking a Girish Ahuja, he will be speaking for 45 minutes or 1 hour. So he will deal in his own way. He, that is very informative. I don't deny that. But we can discuss the provisions in much broader way and much in a deep depth manner if we do for a longer period and among ourselves. So if you agree to that proposal,
Please,
I
please
think
do that. Please do that, and we will find out once the budget comes. If Mr. Girish Ahuja will be available, we will also rope in. If he's
yeah,
not
that's
available,
okay.
we will do it at our own.
Yes. So that, so Mathur sir, what do you say?
Yeah, we have been doing it for last 3-4 years. I think
Yes,
you were the first one. I shared the dash with you for the first
that's
one, and we have been continuing for 3 years. So we can do
yes.
that way, and it was,
Hmm.
I think, quite
I think
successful.
that is a
Further,
better way. Because
on
instead
this,
of hurrying up the things, and we go clause wise clause, and in the ITIT Delhi we are doing in that way. So it takes 3 hours. We deal with each of the clause. We read the clause, we
Yes, yes.
explain with, then we see the comments and observations, and then we take down the suggestions also, which were forwarded to the CBDT or government finance ministry. So in that way, I'll prefer in that way.
Gupta ji, please
Yes,
find out if
yes.
CA Ved Jain is available. You can rope in Mr. Ved Jain.
Which
He
are,
won't come on the
yes,
same day, sir. He won't come on the same day.
No,
sir,
We-
sir,
we-
what
we are
I
not having on same day. We are having after 2 days.
after
that is
2
okay.
days it is better, so that everybody is able to study
Find
also.
out if
So
he is
20,
available, it is okay. Otherwise, we will have our own game. No problem.
President sir, may I add? You see, my experience, and I've been quite interacting with him on this. because on the very day the budget is presented, we are there in the institute. Dr. Girish Ahuja and a couple of CAs are there. I am a part of that. We are there in the institute. We hear the budget live. Then there is a reaction by the president of the institute, for which Girish Ahuja has to prepare a brief, or like we have to prepare a brief to give to the president. The next day, generally for a number of years, they have it. Girish Ahuja is having a tax law education society. They present the budget, and that budget for earlier used to be a physical. Sorry, that speech used to be physical, but over a period of time after Corona, it has become virtual. So 3 years back, we had associated our own zones with that particular virtual program. So we can, as a first step, we can probably try and talk to him that also to associate AIFTP along with these programs. We've done it. We've successfully done it.
I think instead of associating ourselves with somebody else, I think we should do at our own, because we have a larger base, and I hope that number of people can join. Let the other association join the AIFTP instead of AIFTP joining somebody else. Yes, sir. What do you say?
No, what I'm suggesting, I am the very next day. In fact, it is a very next day. You can.
I think after 2 days it is better. In ITT, you know very well. In ITT, we do 3-4 days later.
You see, that we are holding one. That is a different level of discussion.
So I want that sort of a level here also, so that we are able to study in a deep depth.
You see, look at very frankly speaking, you see, first it has to be informative. But my objective is that let it be informative first, and then we go for an in-depth study. You see, every one of us cannot go through that 150 pages in day or 1 day or 2 days.
No, 3-4. This is why 3-4 persons will be there on the panel who will discuss. And then
Right.
Mr. Srivastava you can use your good office. If Mr. Ajay Vora is available, you can also rope in him and tell Mr. Gupta ji.
I mean, sir, all of us. Incidentally, 2 names you took, both were present yesterday. Ajay as well as Ved.
I am not talking of what happened yesterday.
No,
that means our program on 24th. If he is willing, he is available, then you please take Gupta ji, tell Gupta ji.
Right.
We will make it.
Right. ठीक है, sir.
Okay, thank you, sir.
Thank you. Okay, thanks a lot. Thanks a lot, Rutvik.
Thank you.
Great job you have done. Okay, thank you. As Jensa was requested, kindly write an article on this and send to publication AIFTP.
Sure, we will do it. And all of us, those who are interested, let us all try about 2 to 3 pages on the union budget.
Right. Thank you.
Definitely. I think you can assign the particular portion of the finance bill which can be attended.
Sir, I do not have the copy of finance bill in advance.
When it comes,
let it come, we will decide.
When it comes, then we can immediately.
We will tell Mr. Ajay Singh or Dr. Shivram from Bombay to decide the subjects.
But then divide a couple of sections to different people.
It's all the same. We are working together. I do not believe in any prerogative.
No, sir. That means the entire budget that comes, couple of sections could be given to each. So that they can
decide. Every year we have been doing, AIFTP is doing, whether I am president or not president. We are doing that exercise. We will do it.
Jen sir, close karo meeting, दूसरा meeting schedule है.
Close, please close.
Okay.
Thank you.
Thank you very much, sir. Bye.